Now let's return to Tesla, because shares of the electric vehicle maker dropped by as much as 11% in Thursday trading before finishing the day down over 8%. It's the worst drop since January. Tesla saw a 31% decline in deliveries during the first quarter. So after it delivered 91,000 vehicles in the fourth quarter, it only mustered 63,000 this time around. For more, we've got Bloomberg's Dana Hull, who covers Tesla. And in Florida, it's David Kudla, CEO of Mainstay Capital Management, who is shorting Tesla. I want to start with you, Dana, because we braced ourselves some poor production numbers, but these seem to be even worse.
Yeah, what was really stunning was the sort of almost a real collapse in the S and the X, which is the higher margin, more expensive vehicles. And, you know, Musk had signaled that there were going to be problems getting cars overseas, but the street was not expecting only 63,000. I mean, that's lower than the third quarter, not just the fourth quarter, but the third quarter as well.
Let's get the investor perspective then for David. I mean, you're clearly a bear on the stock. Does this reinforce that? Was this worse than your most bearish perspective?
It certainly reinforces our bearish position. We expected the numbers to be poor. The numbers we're seeing in January, February, we thought it would be a poor first quarter, actually came in worse than expected. And it is, you know, it's certainly just evidence of waning demand, not only for the Model 3, but as Dana pointed out, for the Model S and X, the numbers are horrible.
Yeah, is there cannibalization going on here, Dana, or is this a tax perspective? Because we know that to a certain extent the tax changes had made perhaps some front-load their purchases to Q4 instead of Q1. But when you're looking at such an expensive purchase as an X and an S, does that really put you off?
Yeah, I think it's a little bit of both. I mean, remember that the Model S has been around since 2012, so it's a car that's been on the market for quite some time. And if you want a Model X, you know, chances are you have one, or if you were going to get one, you were going to get one when you could take advantage of the full tax credit. So the car has been around for a while, and then there is a sense that, you know, the 3 is a slightly better car in terms of having the latest technology. So there is some cannibalization of, you know, getting the higher end Model 3 versus the lower end Model S and X. And remember, they sort of stopped making the lower end S and X's earlier this year.
Yeah, of course. And therefore, from your perspective, David, we're worrying about the margin being eroded here, because these are more valuable cars, they're more profitable to be making, but they're old. I mean, at what point do we think that, the Model 3 continue to erode? Will we see some new models being able to be put out, and therefore, would that be enough to make you get a little less bearish on this stock?
Well, that's the problem. What this translates into is when we look at net income profitability for this quarter, we had the high margin Model 3s being sold initially in the third quarter and fourth quarter. That's where the profits came from. That's how they were able to show profitability in the third quarter and fourth quarter. We had cannibalization of the high profit Model S and X. They are now selling the lower margin, less content Model 3s. So when we see profit for the first quarter, we're going to see the sales that they did get were in the Model 3s that had less content, lower margin. I think we're going to see some poor numbers and loss, you know, a significant loss in the first quarter numbers for Tesla.
And of course, at the same time, we've got Elon Musk trying to deal with a court case. We're getting some statements coming from Elon Musk saying the tweet in question was true, immaterial to holders, and Elon Musk says pleased with Judge Nathan's decision. Dana, from your perspective, how long does this overhang of erosion in profitability last? Are we bracing ourselves for a poor second quarter as well? Can they get the delivery, in particular, the so-called production hell that they'd been suffering, on track when it certainly comes to China and to European sales?
Well, what's really interesting is that, you know, for a long time, the narrative at Tesla was that they were in production hell. Then it switched to delivery hell, and then the release kind of showed that they're still sort of in delivery hell because they, frankly, didn't deliver very many cars. But if you look at the release, I mean, they also did not produce that many. So if demand is off the hook, why aren't they making more cars? I mean, there just doesn't seem to be, they're not really at a run rate that's above 5,000 a week yet. If you do the math, it looks like they're making, you know, 4,000 some cars a week. So they're just not producing, they're still not really producing in high volume, and that just, you know, I think it just comes back to, like, what is the true demand for this car? Now, Tesla said that they still have demand and that the order book is strong, but you'll note that they're no longer giving a kind of backlog reservation figure.
Yeah, that seems ominous. I mean, David, we seem to be playing to your hymn sheet at the moment because you're a bear and it all seems to be relatively negative news. What is good for Tesla in the last few quarters is they've been building up their cash profile. They've been able to be paying down debt and the like. Now, this doesn't look so pretty going forward at the moment. I've got a chart showing it on the GTV library saying, look, Tesla's free cash flow looks like it's going to fall back negative. How worrying is this from an ability to service debt going forward?
Well, it's alarming if the issue that they had here in the first quarter, and you know, getting at Dana's point, it's really a problem of demand. They can produce cars now. In mid-year last year, it was all about production. Their limit to sell cars was about production. Now it's just waning demand. They're not producing more cars because they simply don't have the demand. And if that continues, which we expect it will, certainly in the U.S., we'll see how demand goes in Europe. We'll see how demand goes in China. But there is a wave of competition coming from around the globe, and especially in China, competition is coming to market. So as that competition comes online, right now it's as good as it gets for Tesla. They're selling in a vacuum. There's not that much competition right now. And so selling against that competition, waning demand going forward, they're going to have more of a cash problem if they can't generate the revenue, if they can't generate the profitability. Their cash problem gets worse. They probably should have done a capital raise this quarter. They definitely should be doing one in the second quarter because they're going to need that cash.
At the moment, we have 14 sells on Tesla, but there are still 13 analysts who say buy, so the jury's still very much out. David Kudlow, we love having your opinion on today. Thank you, CEO of Mainstay Capital, and Bloomberg's Dana Hull. As always, wonderful reporting. We thank you.